All right, good evening, everybody. Could I get a quick sound check, make sure we're good? We should be all set to go here. We got slides up. Does it sound good, everyone? All right, good evening. Welcome to tonight. 3 best trades, 1 worst trade from the last few days. It's not going to take probably more than 20, 30 minutes to go through, so I have some preliminary things we'll go over. We're going to go over a few things. Well, it's kind of in prep for talking about the 3 best worst trades. I'll remind you at the end too, but a week from tonight, I'm going to come back on and do a talk. I don't know what the talk's going to be called yet, but for tonight, I'm giving you, this is the title, Why Trading Seminars Are a Waste of Time. I'm not really sure what the title will be. It'll be something like that. And it'll be a little talk about the good and bad of trading seminars and a little question and also a question and answer session with me to talk about whatever you want to talk about, whether it's the current market or trading ideas or how to learn or not learn, whatever you want, or technical indicators, whatever you want to talk about. All right, that'll be a week from tonight at the same time, Wednesday the 30th at 5 o'clock Eastern Time, p.m. For some of you, give me a 1 if you were with the market somewhat today. If you looked at the market at all during the trading day, whether you trade or not, give me a 1 if you're with the market at all today. Okay, so a lot of you were. So for the bigger picture going forward, what happened today, is that bullish or bearish and a little or a lot? Give me a couple words. The pattern as we see it today going forward for the next few days was what happened today. Bullish, a little bearish, really bullish, really bearish. I don't mean I don't mean past tense. I mean going forward. Going forward, what is it? Yeah, it's a good comment, Glenn. We're still in a consolidation. I have, let me pull it up over here. In case some of you weren't with the market, you can take a quick peek. What happened was no extraordinary occurrence. Let's talk about the QQQ. So up here, this is in case you can't see it that well. This is a 60-minute chart, and that's a daily chart, and then a weekly chart, and a monthly chart. So this is what we're talking about. We gapped down a fair amount, and then we came back. We're still inside the sideways base, and the SPY is actually a little bit below that. But is that bullish, bearish, little bullish, little bearish? You guys mostly answered already. I'm going to explain this like my 10th grade geometry teacher. Well, he didn't use this analogy, but he always gave cryptic answers that I can never understand, and I hated him for that. Remember back in the old Roman days? Yeah, well, remember, as if you were there. But remember the stories anyhow that if some guy had to be punished, he had to choose 1 of 2 doors, right? And either there was a ferocious lion or a beautiful woman there or something like that. Isn't that how it went? Right? Is that just in a movie or something? Or anyways, I'm gonna use that for my analogy. All right. This is going to explain what the market was today. Yeah, I don't know. I don't think I'm making it up. I think that's a real thing. I'm not sure. So here's this other guy, and here's you. You both are up before the Roman tribunal here. You both did something bad. The other guy has to go first. And the way this works is behind either door, there could be a tiger or there could be nothing. Okay, got that? It's not just one tiger either behind door A or door B. Some of you are wondering, did I turn in the right seminar here? Roman history. It's not either A or B, but there could be a tiger A or B behind A. There could be a tiger behind B. Okay, 50-50, both doors. All right. So, and then also there's you go into this room, and then if you make it out, there's a door over here, and you exit if you make it out. So this guy goes first. The other guy goes first. Okay. And as he goes in, he opens the door. And you see, ding, 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 you see there is a lion in there. He closes the door. He's in there for 30 seconds, and he comes out just fine. All right? You have to make a choice now. Do you want to go to door A, where you know there's a lion, or door B, where there's a 50-50 chance there's not a lion? Where do you want to go? Where do you want to go? Did you get that? The other guy went through door A. You got a glimpse. There was a lion in there. But he came out just fine on the other side. If you go to door B, there may or may not be a lion there. But if there is, you don't know what the lion's like. Well, he may be dead, or he may just be not hungry. All you people here, I have 4 answers. That must be a terrible storyteller. Let me try it one more time. So this other guy goes first. He chose door A. When he opened the door, you saw a line, you heard a roar, but 30 seconds later, he comes out of the back of building A and he's fine. He's laughing. Now you have to pick. So do you want to go to door A or do you want to go to door B? I know where I want to go. I want to go to door A. And that is exactly why the market was extremely bullish today going forward. I don't care what we cleared. I don't care what the consolidation is. What happened today is extremely bullish because of door A. Get it? Back to the screen sharing. So everybody got that? The lion story? That's why the market is extremely bullish for what it did today. If you don't get it, I'll take a minute and explain it at the end real quick. All right, let's go on and talk about today. How could you not understand that? How could you not understand? Line behind door A, guy went through. I would choose door A. Seriously, what that means is that today the gap down was tinkering with being extremely bearish. The market could have had a hugely bearish day today. It was an invitation for the bears. An ad went out to the whole world. Bearish people, the market is standing on the brink. Just come push it over and it's gone. Not a bearish person showed up. Not a single bearish person showed up. In other words, we never know what's going to happen from day to day. When we're just cruising along, we're going sideways. If a bearish day comes along, we don't know how the bulls will react to it. We don't know how strong the bears are. We saw how strong the bears were today. The bears were so strong that they had nothing. They had their moment in time. They had their day. They had their moment on the battlefield, and they just laid down and died. They had the bulls. Just all they had to do was push them over the cliff, and they were dead, and they couldn't do it. I.e., the lion, if you chose door B, you have no idea what's there. It could be nothing, you're great. It could be a hungry lion who's going to kill you. Door A, the lion's already there, and he's not hungry. We don't know why he's not hungry. We don't care. We don't know why the bears fell asleep today. We don't really care. No bears. There's nobody selling. And the reason it matters a lot today is because this is those of you who read the letter I put out every day, is a, yeah, it was a bear, not a lion, right? But it was, I should have used a bear, you're right. But if you read the letter I put out every day, this is just a really, really key area in the market. Right here and just below here is really a key area to determine what's going to happen. Just how bullish things are going to be, or if we're going to, really struggle and slop around. And of course, you can't project this forward for months and years. It's just for the next few days. We ought to have a bullish picture ahead of us. It's a big little notch in the bullish chart. Everybody get it now? My 10th grade geometry teacher never explained it that well to me. So let's get back to the slides here. And a week from today, be here for a fun talk. I'll send an email about it. Don't worry about it. Real quick today, introductory comments. I'm just going to go over the process for you to understand what I mean by best trades, worst trades, and what are you talking about trades, where are they coming from, what is all this. I just want to go over a little bit about the whole thing for people who are not that familiar with what I do or the trading room or anything else. And then we're going to look at 3 of what I felt were the best trades and why, and the one worst trade and why. And by the way, best and worst is not, in my mind, or very rarely does it coordinate exactly with money made. I mean, the biggest money trade is not necessarily the best trade, and the losing trade is not necessarily the worst trade. To me, it depends on, well, I'll go over it when I get to it, but it's other criteria that I would use for what the best and worst trades are. So let's talk about a few things. Paul's comments. These are day trades I'm talking about, and these are trades that I do in the DTS trading room, where the members of the room are there. I'm live, the camera's on, my charts, we're talking all morning. I want you to understand when we look at these, like if you take a quick peek at one, you're going to see I have on here the source, the strategy, my comments about it, the post that went to the room, money made, based on risk. And so where does all this stuff come from? Well, these are trades from the trading room, and every day at 9 o'clock I start talking in the trading room, and I give to the members a watch list that is comprised of some research that I do. Every night or morning I look at about 900 to 1,000 daily charts, and I pick a couple handfuls of my favorites, maybe 10, 12, 15 favorite daily charts that I think have the greatest opportunity to move up that day. Mostly focusing on day trading opportunities for those. I also go through 300 hourly charts. Those 300 hourly charts are usually the 300 highest volume stocks in the market. They're the MUs and the Ciscos and the GEs and the Bank Americas of the world that are very liquid, very tradable, and look at the hourly charts. Those are my favorite watches of all, because to me the hourly chart is the mother chart you want to be looking at as a day trader. It is the chart that you want to approve any setup you have on a 15-minute, 5-minute chart, wherever it's coming from. It's not necessarily your strategic chart. It's not necessarily your time frame of reference in terms of where your entry and exit comes from, but it is the parent chart that's going to dictate whether or not you're trading properly. And a lot of times when you have a great setup on the hourly chart, it allows you to find a nice little setup on a smaller time frame. We'll take a look at a couple of examples in just a minute. So we start at 9 o'clock, and I go through that watch list, and then by the time 9:30 rolls around, I've whittled down the watch list to a couple, usually a good solid handful of things I'm staring at right at the open, and maybe another 5-10 things that are possibilities over the next 30 minutes. And then we keep that process going throughout the first couple hours. Generally, I really hit the first couple hours hard. I'm on the mic and we're looking. I think 10 o'clock and 10:30 are prime trading times. I also think, lunch is a prime trading time. Now, we don't sit there all day doing this. We probably put in, 3 hours of work throughout the day. Depends on the day. Some days maybe 4, some days only 2. Tuesday, I think we totally quit by 11 o'clock or something. But it depends. Ideally, I'd like to just hit the morning nice, maybe keep a half a position open for the day and be done. But every day is different. And lately, we've had more opportunity to show up at lunch. So sometimes we kind of, call it a morning at 10:30 or something, and then come back and look at it at lunch. I may or may not come on the mic at lunch, or I may just find a play or two. And that's what our procedure is. But I'm really not sitting there staring at charts for probably more than 3 hours out of the trading day. All right. My style I like to kind of refer to as a moment in time trading. At least my favorite plays are moment in time trades. And it's a little hard to explain what that means. But it means finding something that is the perfect balance of strategic perfection, incredible entry, nice reward to risk, and timing, all boiling down to a moment where the expression comes to life that I like a lot, which is it's not about being right or wrong, it's about making money. And there are some times where I think one of the examples today. No, actually the trade of the week video, I don't have it on today's stuff, but the trade of the week video was a short. And it was one of the bigger reward to risk trades I've done in a while. The back third of it was over 6 or 7 hours. It averaged to about 4 risk units. But that was a perfect moment in time trade, meaning that at the moment I entered, I wouldn't have wanted to bet any appendage of mine that it was going to go lower. But if it was going to go lower, that was the absolute moment it was going to, quote unquote, fall off the cliff, as I kind of described the bulls and the bears this morning. A moment in time would be going long the market today when the market opened. You don't know for sure that we're going to bounce, but if you have some concept that we might, some valid strategy, and you end up with the right timing and this huge possible reward to risk, that's what I'm talking about. Being at the right moment pays you a lot more than being right sometimes. Does that make sense? I know people that are right all the time and they don't make any money because they wait for so much confirmation. They do this, they do that. They get out too early and they're right, but they make no money. I'd rather catch the right moment and be wrong sometimes and make money. Does that make sense, everybody? Has anything I said made sense since I started talking 16 minutes ago? We've talked about Romans and we've talked about prep. We haven't even gotten to the first trade yet, which is what you're here for. But I thought I'd share this stuff with you because to me it's extremely important. A lot of you, everybody listening to me, you're in different stages. I'm sure some of you are probably nicely successful traders that trade during the day. Some of you are maybe successful longer-term players. Some of you are just getting to be successful. Some of you are learning. Some of you are maybe curious and haven't really done much yet. But wherever you are, I'm just sharing with you, if nothing else, just many years of experience. And what I've arrived at is being uh, critical things to really end up making money because, as I've said a lot, it takes some learning and some skill and some patience to learn charts. You have to learn charts, but people can do that. It's not really that hard. But even when you do that, people can lose money. And by the way, if you want to get a better sense for me too, and especially for next week's talk about why trading seminars can hurt you, make sure to read the bottom part of my webpage, the homepage, Discipline Trading Strategies. At the bottom, there's a thing called warning. Read that over. You'll get a sense about what I'm about a little bit. So next thing, after a moment in time, is walk away at times management. I actually believe my goal is to, in a sense, use that moment in time to find the high or low for the morning or for the day. Well, Paul, you're not supposed to ever find the high or low. Yeah, you are. Whoever told you that's an idiot. You're not supposed to try and catch a multiple month, dying quail. You don't pick bottoms like that. But on an intraday basis, when you're in uptrends and the low of the day still maintains an uptrend on the hourly chart, that's exactly what you're supposed to do. I look at it this way: if I find the low of the day and I go long, I can't lose money, right? I may not make much money. I don't even know what that means. How you doing, TJ? I know you, TJ. I don't even know what that. I don't know if you made a typo or if that's French or if I'm stupid. I'm not even sure what that is. But when what was I saying? What was I just talking about? Total mind blank. Give me a word. What was I? High or low, low, low. Oh yeah, if you catch the high or low for the day, you may not make a lot of money, but you can't lose any money. And that, in a sense, is what I try and do. And if I do a good job getting that, I like to walk away. If I'm going to hold a trade for into lunch or half a day, I like to walk away for an hour, go for a run or do something, and because I'm probably better. I'd be willing to bet that I'm better at management than the average person listening to me, because by nature we're all terrible at management, and it takes confidence to really know and understand your plays and your strategies and where it could go to have the confidence to wait for a target, and most people don't have that. But even for me, I found that it pays more money to walk away sometimes. If I'm getting the low of the day and it's going to run into lunch, I'm better off not sitting there. And I like to get set for the day, and then at 10:30, 11 o'clock we break, and I do whatever, go for a bike ride, go for a run, goof around, whatever it is, watch Gilligan Island reruns or whatever, and then check in, and usually that pays more. It depends on the day and how long we want to stand away. But I want you to keep that in mind sometimes. It's something I talk about in other venues and other seminars, but the concept of leaving the building for a while probably would make you a lot more money. That's assuming you're a decent trader. Now, if you pick all losing trades, nothing's going to matter. You can sit there, not sit there. You can do whatever you want. They're all going to lose. But if you get trades that generally have good moves, usually you shoot yourself in the foot trying to overmanage it, right? If some of you, give me a one if some of you, if not understand, totally agree with it. You probably noticed it in your own trades. And if a one, anybody very much agree? Okay. And if you know it, do something to change it. Don't just say, yeah, I do this every day and it's wrong, and then do it every day the next day, and yeah, I'm still doing it wrong, and the next day I'm still doing it wrong. Change. I know it's tough because I know that if you have a couple losses, you don't want to, end up with another loss. You want to put a little money in the bank. But when you think about it, if you constantly think about this, what I'm saying, if you constantly are going to try and cover up little losses with little gains, you've just made your goal what? If you constantly are consumed with covering up small losses with small gains, you've just defined your plan. The best you could ever do is to break even, correct? Everybody? Think about that a minute. It's an eye-opening comment. You may feel good when you're doing it, but if every time you have a loss or two, your goal is just to erase that loss or two, and every time you have a good trade, you take it off, right? I mean, you have a loss, okay, you're down $300, you're down $600, and then you have a trade and it's up $400. You know what? If I take this off the table, I'm only down $200, and that's not too bad. The trade makes $1,200, but you don't have it because you wanted to make sure you locked the 400. and you get in a cycle of perpetual break even. And this is a cycle a lot of people get into. You have to stop that. Anyways, so as I go to discuss these trades, hey Carmen, as I go to discuss these trades, I'm going to use both seminar terms and English terms, English language. English language is subjective. English language is, gee, this is a pretty chart, and gee, that's a nice consolidation, and gee, that looked kind of extended. There's nothing wrong with using English terms. I'm also going to use seminar terms. Anybody know AOAP? Anybody know what that means? Anybody know? I'll give you a hint. English language is subjective. AOAP is what? I don't know why you don't know. I made it up like about 30 minutes ago, so I'm not really sure why you don't know what it is. As objective as possible. I was going to put objective, but I want you to remember trading is not 100% objective. It cannot be and it never will be. There's always some subjectivity. So seminar terms they're not just phrases. Like when I talk about a transition, a tertiary breakout point, that's a very defined concept. That's something that we spend 2 hours defining and understanding and knowing what it means. But yet there will always be some subjectivity, a little. But seminar terms are single phrases that take and incorporate hours of understanding and experience and roll it into a term. Does that make sense also, everybody? So I'll distinguish what I mean as we go along the way. But obviously, like a couple of these trades, to fully understand, to give you every single thing I would know about it, I'd have to talk for 3 or 4 hours. Does that make sense? So with that, if you don't have any questions, let's take a look at best trade number 1. And for this one, I went to Friday. So I went back 3 days. I really wasn't counting today because I tried to have this all done kind of before trading today as much as possible. I just reviewed it this afternoon. But so there's nothing there from today. I had a really good trade today, but I also started off bad. It actually lost a little today, gave back a little bit of a good week, but I didn't include anything from today. We can look at a couple if you want to. So I went back to Friday for the first one. This was not my number 1 favorite. This is probably well, I don't know what it is, but it was one of the top 3. My favorite I know is the third one. It's going to be BAC. That's my favorite. I'll explain why. So this was one of the top 3 favorite trades. And I do about 5 or 6 a day, just so you got a feel. I'd like to say I keep it down to 4 or 5, but it's been 5 or 6 on average lately. So this was CHK short, and I put the charts here so you can take a look at it. This is the daily chart, and that red bar was after the fact. So we're talking about the stock that was gapping up to right there where that arrow is, and before the red bar was there, right? Does that make sense? Like in other words, here I can move that over. So it looked like this. So where is this coming about? So I have my watch list done, and I have my daily watch list done, my hourly watch list done, and this is not on it. Okay, this is not on it at all. This is a stock that I found on the gap list. So before open, I go and I check the stocks that are gapping, and I go through them, and there's maybe 20, 30 stocks or whatever, and I quickly go through them and pull out the ones that I think may have some sort of possible strategic significance to me where they're gapping. And this one I saw was gapping to like 450. I looked at this pattern and I said, hey, I like this. This was a tier 1 novice gap. This is going to be the hourly chart. This is a tier 1 novice gap. Right. Now, tier 1, that's a seminar term. Okay. That's just not a, sitting around the coffee table, gee, that's a great gap. That's a nice gap. It's tier 1 is a specific designation of a 50-point system that, determines how good the gap is. And this is a good gap. And to understand that, you'd also have to look at the hourly chart. It's important on a novice gap. You look at the hourly chart. So again, this is before the red. So understand this. It opened up in here, and that's after this pattern. And I consider that to be a really, really good gap. This turned out to be the number 1 focus. And so the source was the morning gap list. I didn't know about this until 9 o'clock in the morning that morning. Well, 8:30 or whatever time it was. It's a tier 1 novice gap. Comments, good quality. Look now. Another thing that's important is, in order to trade these things, they have to be tradable. Sometimes I see people talk about alleged plays they did, and the stocks are not tradable at the open. A lot of stocks you can't trade at the open. As a matter of fact, I would say in the last 2 months, my 5 of my 8 best gaps were completely untradeable. They were just on stocks and weren't liquid enough. A stock opens, it's a $20 stock and it's a 30-cent spread. You can't trade that. There's a lot of stocks that normally only do 200,000-300,000 shares a day, and they gap open a lot, and you can't do anything with them. Now, that's why I put in here a nice comment about this good liquidity. This thing trades like a banshee. You can trade pretty much all you want, even right out of the open. And that's an important consideration. It just is. You can say it's not, but it is. If you want to trade it and you want to get more than a few hundred shares, you have to be able to have liquidity. Make sense, everyone? So that's a factor. Because the truth of it is every day there are stocks I simply have to pass that are good gaps that I have to pass because you can't trade them. Make sense? There was one today. What was the one today? Of course, I didn't love it because I thought it was gapping more than it was. I forgot what it was, but I didn't even put it on the screen. Yeah, Cara. Cara was an example. Now, I wasn't staring at it open because I looked at those 300,000-400,000 shares a day. I looked at it pre-market. It was incredibly thin, not tradable, and also was gapping a lot more than what it ended up gapping. So it ended up being a pretty nice chart, but didn't even put it on the list. Don't waste the time. Oh no, Lowe's very tradable. Lowe's a good stock. Yeah, Lowe was, yeah. Don't talk to me. I didn't put it on my screen for. I'm not sure why I cheesed out on it. Yeah, I know. It was not perfect. All right, so. And then here now these posts are just copy and paste from the trading room. Whenever I'm going to do something, I let the room know verbally, and then I put an official post written, so that there's no controversy about what I'm doing, where I'm getting in. So I can't all of a sudden go, oh wait a minute, gee, I really don't like this, and that's what it is, and that becomes the quote unquote official room record. So down here you can barely read the time for some reason is in a lighter faded, but it says 9:32. So this was 2 minutes into the market open. CHK short. Now, this type of entry, and it ended up making, for almost 2 hours and 90 minutes. In other words, whatever you risked, whatever you personally want to risk, if you risk $500, it made about 990 minutes. So some comments on this. So here's the 60-minute chart. There's nothing to learn from the 60-minute chart, so I'm going to go past it other than it does confirm the type of gap that it was. I need to look at the 60-minute chart. So that's the reason it's there. No numbers taken from here or anything else. So here's the 5-minute chart. I'm not going down to a 1 minute on this one, even though it's what I use for entry. The entry was kind of a be the tail entry that I call it. And it's very helpful in stocks like this. Notice I was shorting it like on the way up, sort of. It's a little complicated to understand exactly how this entry works, but it's a very effective entry for this type of thing because I didn't have to have it perfect. If it went a little higher, I wouldn't have stopped out of it, and it ends up being a really good entry. Yeah, well, no, it's not a GBI. No, I didn't use a GBI in this. That's not what it was. And actually, I didn't do a great job on this. I could have got in a lot earlier, really. When I in my head, I got in earlier than I did, but the entry was under 40.46, which actually was above the green bar there. And stop at 40.52. So I actually. Yeah, this actually, there was a little luck here because I got in, this is a 5-minute chart, so I got in on the first 5-minute bar on the tail. So you're not seeing it right. I didn't put the 1 minute chart on this one. I didn't want to get too in depth or confusing about this, but if you're looking up there, that's already 20 minutes into the day. This happened inside of that first 5-minute bar. So I shorted that tail up there as it formed and gave it room. And I was lucky because I wasn't going to give this any more room, and it went exactly the number and held, so I was lucky that it held. And then it fell, and then this was a target 1. So why is that target 1? Why is that target 1? Target 1, target 1, I didn't call it as target 1. I simply started a trail at 4:30 when it got there. Why is that target 1? There's kind of a... Oh, I wish you didn't say that, Glenn, because I really like you. But that's not really the reason. Now, the gap fill is not support, period. Gap fill is not support. It could be support. It can be support. It depends how it forms. But just being the gap fill, just being the prior day's close, there is zero real support there. It's just a thing that's there. The reason is because, well, it's because this big wide range red bar into the alleged gap fill. When you puke out like that into even a subjective support area, and that's what I call that, a subjective support area, because if you go back and look at the hourly chart, you see this, there's nothing here. There's no reason at all. It's just where the market closed. Now, there are times that it could, the gap fill could be a support area, but it's not support just because it's the gap fill, okay? But you are kind of half right, because if this would, in other words, this would have bled down into here slowly, I wouldn't have necessarily reacted to this. But when you puke into that area, you're going to get a bounce. So for a first half target, it was a decent reward to risk at that point. I went ahead and trailed half really close and did really a great job trailing that, if that would have been it. Yeah, that too, Sharif. But then notice what happened next. But I was going for half. So I'm going to take two targets. So half was target one. And notice it did bounce that much. And that's because of the puke into a ledge area. But then look at it go. And then the second time I took it as target two. Right? Now, is that going to be the low? Well, guess what? It ended up going that far. I didn't get any of that. I was down here. It didn't surprise me at all, though. I mean, when you catch that, it often just continues to puke. Now, if you go back and look at your own daily chart, I'm not going to pull it up here, but this has been a wild one, because then it went higher the next day, and then it did another novice gap. I think it was today, or maybe it was yesterday. I didn't watch it anymore. I didn't care at that point. So this was the first of the best trades, as I called it. It was a favorite to me because it was a very clean novice gap that you don't see a lot, so I like those when I see them. There are some stocks we trade under the broad topic of novice gap, but they're not really strategically a good novice gap, a tier one that I would go to short right out of the open like that. There's a lot of them that I would, and by the way, this I shorted on the rally, but there are some of these that we go to short if they gap and then try to run higher and they fail to go higher. Okay, so that was number one. If you have any questions, feel free now or feel free when we're done. This is number two. Now this is DHI, and this is short on Monday, the next day. And actually we went Friday, Monday, Tuesday. I took one from each day as it turned out. This was DHI short on Monday. This is 2 days ago, 5:21 at 9:47 a.m. So this is almost 20 minutes into the trading day. Source, where did this come from? This came from my daily chart scanning. Okay, so I'm running through 1,000 stocks, boom, 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 and I see this chart, and I go, hey. I go to myself. I say, hey, I want to flag that chart, and I flag it. Boom. I don't sit there and analyze it. I don't sit there and stare at it. I don't sit there and decide. I just say, hey, if I'm going to pick 20 stocks to look at, that's going to be one of them. So why do I like this stock? Give me in English terms, or if you know the strategic analysis of this stock. Give me whatever you want. Or just drink your coffee and wait for somebody else to answer. That's fine too. We're on no schedule here. I do want to finish at 6. So I like to keep these to an hour just so people know what to expect and we're not sitting here babbling on forever. Pull back into resistance. Okay. All right, I'd call that English terms. How you doing, Leo? Triangle. Okay, what is a triangle? A triangle is. Do you like me, Gary? It's for everyone's own. Triangle is what I call Cracker Jack box, cookie cutter, some wannabe terms because they don't really mean much. But it's a visual description. But there's no meat to the concept of triangle. But yeah, I know what you're saying. You're older than me. That doesn't mean anything. Older gets out. Okay. All right. Okay. Well, yeah. This is English terms. I mean, this is just simply a wide range bar breakdown below a big consolidation area, right? Or it's also known as a transition C in a PTR. And then the comeback rally, right? And now, when I put a stock like this, if we go back to CHK, once I found this, This was like top of the list, one of 3 or 4 stocks staring at it. How do I get into it? Okay. This is not that. This is a daily chart that I kind of I call it back burner. I go, okay, here's a daily chart. It's going to roll over, but is this going to roll over today, this morning, tomorrow morning, tomorrow afternoon? Does anybody know? No, don't really know. Don't really know. So it's just a watch. It's something that, hey, if it does the right thing, I can see shorting it. What's the right thing? Well, any morning, when you have a bearish pattern and you have 3 days up like that, any morning this thing wants to rally, I'd be willing to short the morning rally, period. Right? Yeah, I don't think we're going to see the hourly on this one. I forgot what I put in there. So that's what it looked like after the day. Okay, so this is what I saw when I was scanning, and then at the end of the day it looked like that. So you see that topping tail there? Everybody see a little topping tail in the red bar? That's me. That's me. Because what happened was I put this on a thumbnail chart. Now, again, I'm trying to give you the full lowdown of how these things happen, what you need to do to be successful doing this stuff. Source, my daily chart scans, right? Strategy, a DTS sell setup. I call that's strategically called a DTS daily sell setup in a transition C in the secondary entry point. And I'm using a be the tail entry. This is a nice be the tail entry, liked a lot. Comments, good quality, love the entry, nice liquid stock, pretty liquid, especially by 10 to 10 in the morning. Now I look over, and this is just sitting on a thumbnail. Keep in mind, this is one of maybe 20 other stocks that are not in my hot list area. They're off to the right, where I just kind of look over, and I have them organized in such a way that I kind of know what I'm looking for. And I know that this 5-minute chart, even though I may not know the symbol or know exactly what it is, I know that if this stock rallies, I want to look at it to short. Does that make sense, everybody? This is not really so much a specific technical understanding as it is an organizational understanding. In other words, you want to be able to be, and I'm not contending you have to be like fast or fast reflex. I don't think day trading should be about that. It can be for some people, but most of my trades, their basis is coming off of a daily chart, an hourly chart, a 15-minute chart. And yes, some of them we enter earlier, but this one was entered 20 minutes into the day. We had all the time in the world. All the time in the world. And I'm just saying, if you want to try and encompass looking and having your hands wrapped around more potential plays, you have to be very organized. So I set up thumbnails, and at this time of the day, this is a 1-minute thumbnail, not a 5-minute thumbnail. And I have a stock that I know I want to short on a rally taking off in the opening minutes. So I come in here, and as this thing starts to slow up and starts to form a little tail, I'm getting short. This is at 947. I'm short under 42.30 and stop over 42.55. Now, what do you guys have to say? By the way, that is 3 white soldiers considered a bullish pattern. What's that on the DHI, Robert? On the 5-minute chart, you mean, or the daily chart? On the daily? See, may I? Permission to speak freely, Robert? This is exactly why reading a book and watching a video and going to the bottom of a box of Cracker Jack and pulling out the little 1x1 inch manual of trading, this is not a bullish pattern. See, I love the candlestick book by David Nissan. I got his name wrong, didn't I? Is it Steve Nissan? Steve Nissan. Japanese Candlestick Charting Technique. It's a great book. But it needs to be taken in context with everything, with overall understanding of the price cycle and chart parameters and support and resistance. That is not bullish. It is a counter rally into a bearish pattern, period. Now, I don't even know what 3 white soldiers means, but it's not bullish, period. There's no definition that is bullish. Now, I don't really know if, I don't know the definition of 3 white soldiers. I read it probably 18 years ago, but whatever it is, either you're reading it wrong or it's taken out of context or the book is wrong or whatever it is, but it's just, yeah, but 3 green bars is not bullish necessarily. 3 green bars is a setup to a short sometimes, right? Well, would it not be bearish when the 3 green bars would be breaking across a bearish perimeter somewhere? Right, depends on locate. Right, Murrah, hey Murrah. Right, depends on location. Everything depends on location. See, guys, that's the whole problem with all of this crap. Head and shoulders patterns, triangles, right, Mura? I mean, all that stuff, yeah, okay, it's legitimate, whatever, but you can't make money trading by it. You know, you could show me 10 head and shoulders patterns that work as head and shoulders patterns, and I'll show you 10 that failed. Because if you let me pick where that head and shoulder pattern sits in the price cycle, it's going to fail. Does that make sense? Right? So you have to understand, you know, the whole thing. You have to understand the whole thing that's going on. If you mirror this chart upside down, it would be right, exactly, Colonel. Right. And what Colonel says is true. There is nothing that changes because you turn the chart upside down. What's bullish is bearish, what's bearish is bullish. Yes, and you're right. You're right, Colonel. You know, I used to do that to people because people had a hard time seeing this, Colonel. I used to take the chart, and in one of the charting platforms I have, you can change the bars from red to green and green to red. And then I would flip it in PowerPoint, turn it upside down so it was exactly a mirror image, and send it back to the person and say, do you feel this is a bullish pattern? They go, oh yeah, God, I love that pattern. And I say, okay, do you realize that this is the same chart flipped upside down, and you're arguing with me that you thought it was not bearish? I've done that to people. You're exactly right. If I flip this upside down, we'd all be like, oh my God, I can't wait to get long, right? It is being recorded, Murrah. My success rate with recording things is about 85%, so that's the only reason that it wouldn't make it to the website, but it should be on the website by tomorrow morning. All right, so let's continue on. So this is a free and easy talk, and again, you know, a lot of you guys are, you know, I'm sure you're good traders. I don't ever mean to offend, but on the other hand, you're here to hear what I have to say, right? So I don't want somebody to put something on the screen that I think is just blasphemous and just let it go. I mean, you know, like me, hate me, whatever it is, but I'm here to tell you what I know, and that's why I want to stop and talk about that. So anyways, this to me, now again, this is kind of a moment in time thing. When I'm shorting this on a topping tail, after 3 white soldiers, after 3 white soldiers on the daily chart, and then it rallies again, and I'm shorting that, would I bet my left arm that this is going to drop? Heck no. But I'd bet one risk amount it's going to drop. I'd bet that any day of the week, because I know these patterns. So boom, and how long after I got in, boom, it drops. Target 1 just on a retest of the low of the day. And then I got a little lucky here because I moved the stop down at some point, right? At 10 o'clock, I moved the stop to 42.10. Where did I do that? At 42.43. I can't read my own writing. Oh, target 1 at 42.10. And then moved it on to 42.26. So I got lucky that it didn't come back and recheck that area, and it dropped like a rock. Boom, boom, boom. I would not have gotten this trade because I would have been afraid it would. See, that's just it, Stephen. There is no such thing as stocks wanting to fill the gap. That's one of those things like vampires and zombies and everything else. I mean, they're on TV, but they don't really exist. And sure, certainly you can find stocks that fill the gap, and there's stocks that would fill the gap because they're supposed to fill the gap, right? Like you go back to this thing, I was betting it would fill the gap, right? Yeah, of course that's going to fill the gap. That's why I'm shorting it, because the pattern dictates. But there's no magic statistic out there that says, gee, if you gap up, you're going to fill the gap. And this chart here, there is no way that that's going to fill the gap. I shouldn't say no way. Of course, anything could happen. It's highly unproblematic that that would ever fill the gap, because it's a very bearish breakdown. Look at here. You know how you figure this out? I'd like to talk about what I teach. I call these days the language of charts. Okay? Because it goes beyond just quickie cut patterns, because you get in trouble with those. And this is what it involves. Just think about this. In this whole area in here, right? You have people that are long, you have people that are short, whatever it is. But when you gap down this day, right, you gapped. In other words, nobody had a chance to get out of this stock. We're sitting up here somewhere. There's big bullish days in here. This thing held this low for 1, 2, 3, 4, 5 months, and you gap down. What can you tell me about every bullish person in this stock the last 5 months? What can you tell me about them? They're all in pain. They're all underwater. They all theoretically stopped out, Robert. But not everybody takes their stops, number one. And number two, especially in a situation like this. Because when you gap down, people tend to say, oh, I'm already way below my stop, right? My stop was up here. Maybe it'll come back. And once they hang on, guess what? Now what happens is you have all these people that by the time you get down to here, a little pain becomes what? A little pain becomes what when you close the day that day? It becomes a lot of pain, right? Overwhelming. And all these people, as you start to rally back, what do the weaker hands start to do? And in this case, the smarter ones, what do they start to do? They want break even, but as they start to get back to a reasonable loss, right? You risk $500 and you're down $4,000. And now you're only down $2,000. And you say, hey, I'm not happy, but you know what? I just made $2,000 the last 2 days. And all these people here start to wham, wham, hammer it down. And there is just no way that this pattern is going to return to that base. It's highly unlikely, unless there's other stuff going on. I didn't pull up the weekly chart on this in front of you, but the weekly chart did not help this. There's nothing here that saves it for the moment. Actually, I forgot the weekly chart. I knew I didn't have it. Let me pull it up over here real quick on my. Yeah, the weekly chart. I actually may step in to save this one. It's in. This whole base area is in just like a 50% retracement area on the weekly chart. So it's just kind of in an area. There's no real support there other than just kind of retracement concept. But all right, so let's move on to number 3 and number 4 here real quick. Targets, done. All right, BAC, number 1 favorite. I told you that I spend time to go over 1,000 daily charts, 300 hourly charts, and the entire gap list every morning. How long does that whole process take me? Yeah, if I really, like sometimes I'm watching TV when I do it, but if I really just bolt it down, I could do it all in 30 minutes probably. Depends on how many gaps a day, but yeah, probably 30 minutes. The reason I said that is, I mean, naturally, if you're newer, it takes you a little longer, but you also don't have to do as much that. But the other thing is that even if it took me 2 hours, 3 hours, this is what you do it for. This is the play like BAC. Source, my 60-minute chart scan. This, and you know, this is just yesterday, and there's people in the room here that'll tell you, this was just my hands-down favorite trade for at least a month. This is just my hands-down number 1. Got to have it, can't miss it. Good trade, and it actually it did way better than I even thought because the market struggled and this thing still went higher, so it was good. This is technically called a 60-minute transition A with a tertiary entry. Comments, favorite setup of the month, great quality, love the entry, and also, again, a very liquid stock. If you're going to trade these things at 9:30:00 in the morning, you have to have liquidity. DHI, Paul, you've not heard you for some time. Hey, how you doing? Basil, how are you? Let me flip back there real quick to DHI. The DHI is a daily sell setup. It's technically I don't remember how versed you are, but it's a transition C daily sell setup, and it's not a gap. It's just simply, this is the chart right here. That's the daily chart. Boom, 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 retracement in there, and then it's the top of that red day that I was shorting. And it actually wasn't a 5. It's what I call a be the tail entry. It's a little different, but you know, you can kind of say you took it off the 5-minute chart. So that's just using an intraday entry to take advantage of a possible daily chart. And actually today, I'm looking at it, today it had a green bar. So we'll see what happens to it. All right, so BAC, that was the hourly chart that I saw. And then the 15-minute chart I want to show you because the 15-minute chart is just really the nuts here. This thing gapped up on Monday, right? And gapping up like that is not that impressive. I mean, I didn't even look at this stock on Monday. But what's impressive is holding when the market wasn't really strong Monday. The market was kind of weak Monday. And this thing held. Now, refused to even come close to filling the gap. That's impressive. And then we have a day I felt was going to be bullish, and then we have that base going into the day. These are just my favorite things. Just absolute favorite things. And that is there, the 15-minute chart showing you how it performed for the day. And take a look at the market this day. The market didn't do this. This is the combination that I love, which is to try and coordinate things with the market, but yet find things that are on their own. Now, in all fairness, today I kind of did the reverse of that. Today I literally called the market low, right? I typed in the room. I said, okay, bullish bias right now, boom. And I got in two longs, and between the both of them, they made zero. They broke even, right? If I would have just gone long the Qs, would have made the week if I walked away. So, sometimes you do it wrong, sometimes you do it right, but it's my style, it's what I do. I like it a lot, it works most of the time. So this is an example of, just a great play, and the reward to risk, moment in time, the whole thing, everything is here for me on this play. So this is literally just right after the open. And this is what I call a secondary sign of strength entry. It's technically a transition A tertiary entry, which is a form of secondary sign of strength. And the entry came off of, here's a 1 minute chart, all marked up for you. Entry 3061, stop 3049. So basically that includes the inside outside. So that's basically a 12-cent stop to the outside. On the first rally, I trailed a quick third so that I knew this trade would be profitable no matter what, and then walked away for a while. There are entries all over on BAC. Right here, here's your answer, right there. I mean, all of these are entries. And this, to me, this is the great entry here. Right over the topping tail of that bar would be the great second entry. I didn't really need it. I got safe. And target 2 and target 3, you know where they were? I mean, they're off the chart here. And this is the one, again, I walked away. I went away for 90 minutes. I went and I think I took a bike ride this day and came back at like 12:30. No, I came back right here. See that little red and see that tail right there? That red bar had just formed and the tail had formed. And I put a trail stop right underneath there, right? What time is it? It says here, BAC trail to 3069. BAC target 2 trail 3090. See that? So right there, I raised the stop on target 2 out of 3 targets to there, and it kept going. So then the target 2 trail up to 3104. With things like BAC, once I get in the neighborhood, I'm typically just trailing it because there's no downside. It's a very liquid stock. You give up a penny trailing it, and I just try and trail it properly. BAC target 2 trail all the way up to 3108. Target 2 trail up to 3111, and that's where it finally went out. So target 2 ended up all the way up here, just off the high of the day. You can't do any better than that. So that was, for a whole bunch of reasons, my favorite play. Plus, I wasn't here. I was not here for 60, 70, 80 minutes. I was gone, having some fun. If I would have been there, no way I would have taken that. I got to the high of the day with the 2/3 of the position. No way I would have done that. No way. So that is a favorite trade of mine, not just for the last few days, but probably for at least a month. It's not a running trail stop, Murrah. It's not like you put a running trail. It's done by looking at the chart and continuously monitoring minor inflection points as you go up. And those inflection points continue to zoom down to a more micro concept the more higher you get on the chart. So it's a little lucky to have that pure of a pattern, and that's why you don't always get it that high. But it was just such a power trending pattern. It never broke stride anywhere. Never broke stride. All right, and then we're at 6 o'clock. But I had a power failure, and I think that has to buy me 5 minutes, correct? Unless you want me to stop right now. My worst trade, my one worst trade. Now, don't get me wrong. I had trades lose a full amount of money. I'm not trying to imply that. But some of them that lost money were just good trades. They just, they don't all work. This to me was my worst trade because it was a painful trade and I don't know if I made a mistake or not, even understanding exactly what I'm supposed to do. And it's not because I don't know, it's such a borderline case. I'd have to have a trial and have a argument with myself about whether or not I made a mistake. Let me show it to you. This QQQ short on Monday. Source, this is pre-market analysis, 60-minute chart, sideways pattern. You run up in the morning, you short the top. Strategy, a 5-minute DTS sell setup after the 60-minute major resistance sell. Comments, perfect entry, moment in time. Overmanaged, question mark, discuss. Let's take a look what happened. We ran up in here. I didn't short the top in there. I don't remember why. I think I was doing something else short Monday. I'm always shorting something. Let me take a look what I was doing Monday. Yeah, Monday I was short. Well, I was short the DHI and I was short FNB. Yeah. So I didn't want to short a third thing at the time we hit there. But let's just go to the next. So, and by the way, this is only a partial loss. That's why I started to say it. I did a half risk on it. You know, that half risk, it lost a fifth of an hour. So it lost $500, it lost $100. So it wasn't a bad trade from that sense. It was a bad trade from the sense of lost opportunity, which I think is something you do need to consider. I know a lot of people don't, but I think you do. Here's the 5-minute chart. Here's where I went to short. I lowered the stop and trailed out for a fractional loss. Who cares about the loss? Look what I missed. That was a 4R move, a 4 risk unit move. 4 risk unit move. Now, Monday was a double the goal positive day. This would have made it 6 times the goal. And, you know, there's a saying out there that missed money is better than lost money. I don't agree with that saying, really. It's not really true. Because if you miss a trade, you lose 1 hour. If you miss a good trade, you maybe miss 4 hours. I know it's opportunity. Here's the chart that I was working from. And again, I didn't short the high at the 60-minute chart. This is later. And this was at just a little before 11, right in here. And this is what I mean by a moment in time, right? We kind of have lower highs, you put in a higher low. But remember, we're coming off that 60-minute resistance area. So the big power, the big hand is pushing down, right? So I see this little thing in here and I want to short that. And that was the moment in time. And I brought it up to the room, just discussing the market. I go, man, that is really a perfect moment in time. I said, you know what, I got to do this. And because I was short 2 things, I did a half risk. And it broke down. So watch what happens. It breaks down, it comes back, and boom, this is what I do. I put the stop up here. I lowered my stop. This becomes a 1/5 risk now by bringing the stop to here. This is what I do. I try and get into almost free trades. I did it today with the 2 stocks had huge moves up, and I didn't take them up, but I shorted the top. The RL was my best trade today. I made good money shorting RL, but then I tried it on Zion. And Zion, I got in, perfect entry. Because of the perfect entry, I get in, got my stop down, it became a free trade. It didn't work. It went out of break even, but it was a free trade because of a really great entry, and that's what this is. And that's why I do this. So on one hand, I'm saying, you know what? This is what I do. I get entries like this, manage it in such a way that on the first little pivot, I have almost a free trade, and then I let them work. Well, look what happened. This is what just kind of, I don't know what to do. It wasn't supposed to happen, was it? Yeah, okay. It came back up. It went 2 cents, 2 pennies on $169 stock, took me out at a fractional loss, and then it dropped like a rock. What do you do about that? Well, chances are, if you did everything right, you just put on that face and you say, well, yeah, I know. I make a career out of not doing that. But no matter what you do, I don't care where you draw the line in the sand. I don't care where you get out. I don't care how protective you are. I don't care what you do. When you look back, you could always be off by a penny. Is that true, everybody? Now, if you're off by a penny all the time, you need to fix that. But there is no way you can avoid it every time. Because to try and fill all the cracks, you will leave bigger cracks. There are some things that will fall through the cracks, and you just can't help it. For me to do what I do all the time and to trade the way I do, and to make money doing the stuff I do, you have to understand that that is just something sometimes you can't deal with. It just, okay, it happened. Worst scenario. And so what? You know, I had a break even or small loss trade. It would have made, and keep in mind, I did this at half risk, so 4 hours would have been 2 hours, and I wouldn't have taken the whole thing. I figured, realistically, I would have taken 1.5 and 4, so it would have been like 4.5 to about 2, 2.25 average. So I mean, it would have made some money. But anyways, that's why I consider my worst trade. And I haven't officially called it a mistake. It really wasn't, but boy, that was just, you know, it was so close. Can you place the stop? Well, sure, Mur. I mean, you can do whatever you want, but you got to keep in mind. I mean, I try and set a balance. I know what I do very well, and the problem is that if you do keep it there, then and it goes higher, then here, let's say the chart did that, pull back, and then did this. and then you take a full loss instead of a partial loss, and you look back and what would you say? You would say, well, why didn't you lower your stop when you had a clear higher pivot that clearly indicated that it wasn't working, right? So, I mean, you can second guess yourself all the time. And what you have to do is come up with a system that the vast majority of times does what it wants to do, but you will always have some fall through the cracks. You can't avoid that. And yes, you know, I wish I would have got a cup of coffee and came back and said, oh my God, thank God I wasn't sitting here. Put the stop there. You know, and generally, but you know what? I want you to look at something. You see this? See that green bar? That was a red bar down to there at one, and it was literally the exact moment that was the third red bar down. I know it's easy when you look back and you say, oh, geez, this guy's an idiot. But that was the third red bar down, right? And I already had 2 shorts, and I'm trying to pull off a free trade. So I'm like, hey, 3 red bars, and there it is. I'm way away from that pivot. That's my stop. And I had no sooner set it up, and boom, it just climbed right back, took it out, and then fell like a rock. Just one of those things where you feel like, you know, there's somebody sitting on your shoulder saying, we'll take care of you. Looking after the factors. Leo. Yeah, that's correct, Leo. Looking after the fact. But you know what? Looking in real time, I did it perfect. I'll stick with that. But nevertheless, this earned my worst trade of the day credit. 610. How many pennies was the stop? Well, the original trade was 169.06 by 169.32, so it was originally 26 cents. It was originally 26 cents. And then I lowered the stop to 16.16. So I went from 26 to 10 cents on half risk. Keep in mind, it's not like I made the decision here to get out. You know, I made it here when I had 3 red bars. And like I said, if this would have come back and gone over the high and I didn't lower my stop, that would have been a mistake. That would have been the mistake. And again, I'm basing on what I do. You know, you can't judge what I do, just I can't judge what you. I could give you comments on what I think is right or wrong, but I mean, I have something very specific I do in the way I manage, and I did it right. I'm just not happy about it. So nobody here can say that was wrong because you don't know what was right or wrong for me. But certainly it's painful and certainly not what you want to do normally. All right. Next week, be back here for just kind of it's going to be a non-technical, non-charts talk. It's going to be a talk about for anybody who is either new to this and is curious about learning to trade or invest for yourself, anybody who's been kicking the tires for a year, anybody who already paid a ton of money to learn how to trade and you still don't know how to trade, for anybody who thinks trading seminars are a scam and a ripoff, for all of you, come talk about it next week. And this is not sarcastic, by the way. I'm not being sarcastic. I'm not going to come here and say, gee, that was a sarcastic title. Let me tell you why you need one. I'm not. I mean, there's some big negatives that need to be overcome. And the point of it is to maybe help you understand, you know, what you need to do if you want to learn this. It's not as simple as, you know, most people try and blow smoke up your butt about. So have a great evening. We'll see you guys tomorrow in the trading room, those of you that are there. And those of you that want to be there, come sign up for a trial and join us for a few days. We'll see you guys later. Have a good night.